Hey everyone, welcome back to CryptoCache. Thanks so much for joining me here. Hope you're having an amazing day. We're going to take a look here at NEAR, see what's going on. If you want to become a better trader, CryptoCache.tech is the website, link in the description below. I teach you how to become a better trader. This is my full-time job. I can tell you it is absolutely realistic to be able to do this full-time and to have fun with it too. You just kind of got to be chill and relaxed and less hype. Anyways, that's kind of a joke, but on all things aside, honestly, it does help to have a stable foundation, and those are things that I teach you. So again, I have a trading academy, community, and signal group. Link in the description below, CryptoCache.tech. So taking a look here at NEAR, here's kind of what's going on. First of all, we're doing really well. It's maintaining. We got this little pendant type of pattern that's forming here, so to speak, and it's looking pretty decent. There's a great chance we might see a breakout to the upside, if not already. But we'll look at smaller time frames to identify. But I'm not surprised that the price action is here where it's at based on the fact that it did break out to the upside previously. And that is just something we're going to probably expect to continue to see from NEAR because it has tremendous potential. It's the reason why we have a swing trade open and our first profit target is $13.75. So it's absolutely going to take place here soon. It's just a matter of how soon. But NEAR is on a nice ascending type of pattern. So, very similar with Bitcoin in that regard as far as the concept is concerned, only longer here, where we keep seeing these higher lows. In other words, $6.48, $7.45, and again here at $8.23. So, hypothetically, it continues over and retraces back down. $10 should be the next bottom, right? It'll continue to progress upwards until it doesn't. And that's kind of the natural way of anything, really. But truth be told, in this regard, with higher lows, that's the important takeaway here. And you see that in the larger time frames. That's important to identify. And we also see it on the smaller time frames too, right? Higher lows, maintaining this consistent pattern to the upside. Okay, so what we want to do here as well, probably just extend this guy out a little bit and kind of see, what happens in the near future here. Is it a guarantee it's going to hit that point? Definitely not. But the likelihood is extremely high. And we'll explain here in a little bit what I mean by that. All right, so taking a look, of course, at some of the standard stuff, simple moving averages, both are kind of converging at the same place. In other words, they're maintaining the same place. And this is really awesome because a lot of times what you'll see what is referred to as a death cross where the 50 intersects with the 200 in a downward fashion. That tells you you've lost momentum in a lot of ways. And the reason for that is, of course, based on the amount of volume and price in the last 50 days. That being said, the last 50 and 200 days, the average price is right here at $10.75. So we can consider that to be the floor rate. That's the lowest point in which it will go, okay? Now, taking a look at the price action, it's upwards of $12, $13 right now, of course, but that's going to continue to work as a support level and likely progress upwards. We will probably see the 50-day SMA work its way continuously or contiguous with the actual ascending pattern here that we have, this trend line. Okay, so that's a beautiful thing about trend lines. A lot of times trend lines will follow moving averages, and that is kind of just another way in which it helps us understand and reaffirm the fact that we're on the right side of the tracks. So right now we're definitely on the right side. Okay, so again, the likelihood for breakout or breakdown, so to speak, is much lower. Okay, and then of course, I had this line drawn here from before where we saw this type of breakout pattern, of course, occur, where it was an ascending type of wedge and it broke to the upside here. And now we're here where we're at, which does, once again, look like a pendant pattern forming. Okay, so once again, all good stuff there in that sense as far as patterns and continuation, moving averages, we're looking great. RSI isn't overextended either. It's right between 50 and 70. I like to see that. It's a perfect place for the price action. In my opinion, I like a good old 60, nice little average at 60. And then, once again, a nice break above 70 is okay on the 1 day, but we don't want to see that on the 4 hour. So let's take a look at the 4 hour and see if there's any overextension. We are not overextended because you can see back here when we had a little bit of a pullback when the price came up over 70 on the RSI. But generally speaking, as long as we stay under 70 on the RSI, on the 4 hour, we're in good shape. And the key here is that we are making higher lows effectively. So if you were to kind of consider each one of these, it is still progressing upwards in that sense, right? So maybe a little more aggressive than we wanted to, of course, because this is a pretty significant increase here, but it is followed by a decent period of consolidation, and that's the reason why the price continues to progress upwards. We have that in combination with extra volume coming into NEAR protocol, and that really just helps overall everything out in general, okay? So really all good stuff here in this sense. The only potential we have here is that if we lose momentum, we might see a divergence, of course, but I don't put a lot of weight into a divergence when we have a lot of other continuation factors. Okay, now a bullish a bullish continuation is one thing, because when you have a strong continuation on the upside, that divergence shouldn't occur, at least in strength. because again, a lot of buying pressure, not a lot of selling pressure. So this is almost null and void at this point, if that makes any sense. Otherwise, long-term, big picture, it's good to kind of use as a general rule of thumb, but never make your decisions based on a MACD alone. It doesn't necessarily signal specifically in itself, by itself, a trend reversal, okay? Because again, the trend is still your friend until it becomes your enemy. In this case, the trend is essentially continuing to progress upwards as well. So we got a couple of different possible scenarios. We could see continuation higher as it's doing right now, or we lose this current, most recent trend, and we go with the more slower, more longer-term trend line and continue upwards. Because no matter how you look at it, we got 3 different trend lines. All of them are progressing upwards, right? The average price is slowly getting higher for near. So whatever it does between now and then is up to it. But generally speaking, we have 3 potential scenarios here, and the likelihood of these 2 upper ones is much higher, based on the fact that it's been continuing pretty consistently here, and Bitcoin is showing a lot of strength. Bitcoin shows strength. Near shows extra strength, right? So in that sense, it's looking very good, okay? Just take my word for it. Everything we see here so far is more positive than negative, right? And that's what good traders do. They analyze the overall scenario and help to make an informed decision. Making an informed decision doesn't come with just, a quick glance at, the 15-minute time frame. You got to look at every little time frame and identify, hey, okay, we are overall generally building a case towards this being more likely to go up than down. And right now we have more propensity for an increase than a decrease. Or, also equally as important, sideways action too. So, and let's take a look at that as well, because let's jump on the 4-hour really quick and take a look at TD sequential. We don't have any over-exaggeration. In fact, it comes up to a 5 or 6 and bounces, and just keeps resetting every 4 to 5 4-hour candlesticks. So we're talking anywhere between 16 to 20 hours, it's changing direction. And that's actually very healthy. That gives us a healthy staircase type of pattern that I like to look for in trading. In other words, it looks kind of like this, where the price action goes up and over instead of one of these, solid super increases that a lot of people are fans of. I don't prefer parabolic increases at all. I like steady continuation because it's much easier to trade. Okay, again, different strokes for different folks. There's nothing wrong with a sharp increase in some cases, as long as it's followed by a significant volume. Oftentimes it isn't, and we see a decrease. But generally speaking, here with near, we're looking really good because there is volume to kind of communicate this, and we can see there's a lot of decent amount of volume here, right at about 1220. So there's good volume support there in that sense, and obviously a tremendous amount of volume between 10 and 15, 10 and 12, or 1150, right in that range. Okay. So I really like what I see here so far. Let's go ahead and take a look at TD sequential. We're hitting an 8, of course. That makes sense. We got a 9 previously, another 9. So it's hitting 8s and 9s pretty consistently. So with us being at a 5 here, we could see another 4 more hours of continuation on the downside, followed by a bounce off of 1270. That's a strong likelihood. Let's see here. Looking at Ichimoku Cloud, we do still technically have a buy signal here, or more importantly, just a maintain your position open signal. In other words, lagging span is free and clear of price action so far. The cloud is below the price action, and conversion lines above the baseline. Those are all 3 things you want to look for, kind of letting you know that you're in the right, again, on the right side of the tracks. You want to be on this side of the tracks, not on the bottom side. Because once the price travels into the cloud and breaks below the cloud, then it's a change in direction. And keep this in mind, this is why this momentous trend is beneficial. Not only does the 50-day SMA tell us that it's working up concurrent with this trend line, but we also see the price, anytime it travels into the cloud, it gets rejected. In other words, it comes into the cloud and bounces off and comes up. It never breaks this lower lead. And that's something to really note too, because I get a question a lot like, hey, okay, price broke into the cloud, we're screwed. No, not even close. When the price breaks into the cloud, that just pretty much means it's kind of a point of contention. It could shift one way or the other. If you see the price move into the cloud, traditionally speaking, you don't want to take entry. That's the common rule of thumb. But if you have a trend line here moving upwards like this, it keeps bouncing off these key level supports, like the 50-day SMA on the 4-hour, then you're definitely going to be in pretty good shape to be able to see the price action continue higher. So if this price comes over here, travels into the cloud, bounces off this trend line, we can expect it to come back up. Okay. All right, so that's generally what you want to look for. So again, I would say much more likelihood for the price to continue higher and or sideways in the immediate future for near than it would be to come down. Your targets would probably be somewhere in the range of right around 1370, 75. Again, we got in much earlier So obviously that's a good profit target. It's going to yield us somewhere in the 20 to 25% range. But secondary and tertiary targets would probably be somewhere along the lines of previous support levels or resistance levels, right? And what you want to do is shoot for the levels just below a key Fibonacci retracement line. So for example, a next target, just say for example you got in at 1170 and your first target is 1375. You would take a 17% profit, maybe take 50% of your profits there, and then your next target would probably be somewhere in the range of 1550 or right around 1675, okay, to get you that extra 20%. And then of course the very last one would be just below this key level resistance here at about $20, and make it an even 20, because obviously the price came out to about 2120 or 2021. Sorry, a lot of 20s in there. Generally speaking though, that's the concept, right? It's not an exact science, but generally speaking, when you see the price come up to a specific resistance, it'll get rejected and come back down. So why not put your profit target just below that resistance level to ensure you get filled, and the next person that got a little too greedy is going to be sitting on their hands for a while, right? Different strokes for different folks, but that's just kind of how I like to do it. I play it safe, and it's more effective, and it's more consistent, all right? To me, consistency in trading is the most important thing. And there's a reason why I trade at about 80 or 85% success rate overall. And it's because I'm patient and I try not to get super greedy. I take profits when I can, and I make sure that I am, looking at everything before I take a trade. Don't just jump in and start day trading and look at the 1 and 15-minute charts and think that you're a champion because you've taken a couple of good trades. You need to understand the big picture in order to understand the smaller time frame movements, and the overall trend is your friend. All right. Okay, hopefully that helped educate you some. Obviously, a lot more where that came from. CryptoCache.tech is the website. And the link in the description below, of course. And what you want to do is check that out, see if it's going to fit your boat, float your boat, fit your bill. I don't know what you want to call it, but generally speaking, it's very, very good return on investment there, because I provide you with signals that I take. We've been hitting 5 to 25% profit targets consistently. But more importantly, either the Trading Academy teach you the foundations of trading. I think you deserve to become a better trader. Consider that. All right, either way, look forward to getting to know you better. Hope you have a great rest of your day. Thanks again for your time.